Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at the small caps. Okay, so these are pretty much the penny stocks. There's one here, GTHX, that's trades at a higher dollar value per share, but it's still a small cap. So first up, let's look at VTVT. This was the big winner today, closed up over 43%. So yeah, this has been a dead cat bounce play. The bottom line is it did close above EMA 4 today. That's the pink line at 108. That's the key level to hold. It has to stay above that level and above the bottom of the gap at $1 to continue heading higher. There's a gap between low of day on the 9th and high of day on the 10th, and so it broke above the bottom of the gap resistance level. Now it needs to stay above EMA 8, and then it needs to break up, or EMA 4, and then it needs to break EMA 8. It had broken above that level intraday at 153, but it pulled back. So if it closes above 153, then you're looking at EMA 13 at 214 is the next target. If it fails to break EMA 8 and it drops back below EMA 4, it will be a risk to hold. Check out the big volume spike today. There was that upper wick, so it looks like they could have been selling some shares. If you look here at the 15-minute chart, you can see here there's the gap over here on the close on the 9th, and then you have the high of day on the 10th is the bottom of the gap. And so today it broke out above that gap level at 1 o'clock today on this candle, and it kept pushing higher. Notice the candles were riding EMA 4 all the way up until it hit that 200 simple moving average at 138. It failed to turn that level into support, and it pulled back. So going forward tomorrow, you want to see 138 turn into support. If it fails to break above that 200 simple moving average on the 15-minute chart, it would signal more consolidation, and then you would have that middle Bollinger Band at 108 on deck. It has to hold the middle Bollinger Band and this bottom of the gap level at $1. Drop below both of those levels, and you're looking at the 50 and 100 simple moving average on deck. Now, if that 200 simple moving average does turn into support, you have to break above the high close here, which is just below 160, and that would set up a run to the 300 simple moving average at 220. Okay, so let's take a look at CNET. Closed up 27% today, and so this is the dreaded black candle. Okay, so this has all the red flags in it. So what you have is a gap up open. So there's a gap between high of day on this candle and low of day on this candle. So if you look here, there's this space between these two candles. And then also notice that today's candle is floating. Look how it's floating up in space above the upper Bollinger Band. So you have a gap up open above the upper Bollinger Band while in an uptrend. It did have a white candle yesterday. It's in a current uptrend here. And so basically these are all the red flags that the candles are likely to head back into the bands. There's likely to be a red candle tomorrow. If you don't believe me, look at what happens every time you see a black candle on this chart. There's a little black candle down here. Here's a red candle, black candle, red candle, black candle, red candle, black candle, red. You get the point. Each time it's formed a black candle, a red candle has followed the next day. If you see that's the pattern, the historical trend for a stock, then you have to anticipate history repeating. History is saying that the odds are a red candle forms tomorrow, and there's further evidence that's possibly going to happen due to this candle trading above the upper Bollinger Band after a gap up open. The candles like to work back into the bands after that happens. Now it could push higher and it could be an exception, but going forward in the future, when you see this pattern form, the safest thing to do is to head to the sidelines if you're in, and if you're looking to trade, don't jump in. You're better off waiting for that pullback. Wait for the gap to fill and a drop down here to this 100 simple moving average at 247. That would fill the gap. Okay, if you don't believe me, look at the 15-minute chart. Okay, so all the magic happened in the first candle of the day. Notice the big volume spike. This is what we call a climax spike. Check out the previous volume. Nothing, right? And then you have boom, big volume at the open, and what do? They sold it off. Notice how they just drove it down. You have a downtrend here, and so this is just signaling more downside risk. They diluted into the run, and notice how volume was drying up into the close. That's not what you want to see. You don't want the volume drying up as it's pulling back, because as you can see, it has very limited average daily volume, and so it just makes it tough to sell if you get trapped. And so the bottom line is it needs to hold the 50 simple moving average now at 295. That's the next support level. If it fails to hold that level, then you could see a drop down to that 100 simple moving average at 268, and then possibly a gap fill all the way down there to 250. Okay, so yeah, avoid the black candle. Another example, SPI closed up nearly 7%, but what happened? The black candle formed. Okay, so when you see this pattern forming, the best thing to do is head to the sidelines. Look at the black candle. It's hard to see over here. Back in January, a red candle formed, followed. Down here you do have a white candle that followed this black candle, and maybe that'll happen again. Okay, so going, it did pull back. It is trying to get a new uptrend going. It's almost filled the gap below. What would be best is if it came down here and it hit that 52, 53 level and filled the gap, right, the top of this candle, and then got back above that middle Bollinger Band. It has to get above 56. Okay, that's where the dotted purple line's at. It has to close above that level to get a new uptrend going. It also needs to stay above EMAs 4 and 8, above 53 and 52. If it can stay above both those levels, that'll signal more upside potential. If you see it close below 52, that would be a red flag. Now, if it closes above 56, then it could possibly push higher. You can see the upper wick in today's candle hit that 50-day simple moving average. It needs to break that level to head higher. It needs to, the 50-day simple moving average at 70 is the key resistance level to break above after that middle Bollinger Band. Okay, take a look at JONE. Okay, yeah, this bounced today, closed up nearly 10%. So yeah, it had some news that they, are getting rid of some of their insiders, and there are some new people taking their place. It didn't seem like that great of news to me. I think the street agreed. Once it hit this middle Bollinger Band, it sold off and pulled back. It failed to get above that level. Check out this. Every time it gets to this dotted purple line, it fails to hold and it pulls back. Support broke back here in January 1st, and then it got back above in February. But then it finally broke, and then it's failed this entire time to turn that level back into support. And so going forward, it has to get above 70, above EMA 13, and above 76, that middle Bollinger Band, and turn into support to get a new uptrend going. If it closes below EMA 4 at 65, it will be a risk to hold. As you can see here, when candles are forming below EMA's 4 and 8 resistance, it signals downside risk. There was a PSAR bull flip today. There was a volume spike. So all it has to do is turn that middle Bollinger Band to support, and then it could run up to that 50-day simple moving average at 91. There was a bullish crossover in 8, 13, and 5. Check out how it's pinched, MACD line and signal line on the 12, 26, and 9. It needs to, if it crosses over, that would signal the possible start of a new uptrend. Okay, let's take a look at a few healthcare sector stocks now. Those were a couple of energy sector. Let's look at EYEG, closed up 22% today. And so the bullish move today for this stock was it did close above the middle Bollinger Band. So now it's back above the middle Bollinger Band, currently at 41. That's the key level to hold. If it can stay above 41, that would signal more upside potential. What you're looking for now is a close above that 50-day simple moving average at 53. It broke above that level a couple weeks ago, but it failed to close above and pulled back. You can see the black candle and how it pulled back following. This is why we avoid that black candle. But now we have the white candle and the close above resistance. So if you get a close above that 50-day simple moving average, that would be really bullish, and it could run back up to this gap level. You can see there's a gap over here between high of day on this red candle and low of day on this candle, and so you can see where this is the gap candle right here, and you can see where it keeps hitting this zone and pulling back. So you could see a run to 70 if it breaks above 53. So keep an eye on EYEG. Okay, another one to take a look at is OCX. This is very thinly traded, only 261,000 shares. It closed up 14% today. I'm showing you this chart because it did close above the middle Bollinger Band, and it did have some big volume back here in March, and it's just been heading higher after this big load. And so basically, if it can get above this key resistance here, so you have the support, and then if it can get through this little zone here from March, it could run up here to this 100-day simple moving average. That's the next big resistance level. If it can bust through 3, look for a possible run up to that 100-day simple moving average at 366. Look at all these white candles in a row, all these green volume bars in a row. I mean, it could stall out here at 3. If it does, what needs to happen? It has to hold that 50-day simple moving average at 261 and stay above EMA 4 at 256, and that would be really bullish. If it drops back below the 50-day simple moving average, that would signal more consolidation. It would be a change in this uptrend. You can see they're just stair climbing it slowly higher. So this is the big resistance level to break. If it fails to break it, it could signal a temporary top. Okay, take a look at ADVM. It only closed up 5% today, but it also had the close above the 50-day simple moving average. That's a good move when that happens. It did happen on super light volume, but nonetheless, if it can stay above 657, that's the green line here, that would be very bullish, and you could see a run up to 740. That's the top of this descending resistance line, and also just above at 760 is this high close from March, the horizontal resistance level. So 740 to 760 is the target if it can stay above that 650 level. It closed above the middle Bollinger Band last week. It's trying to get a new uptrend going. Now it's just about holding on to that 50-day simple moving average. So yeah, so keep an eye on this one. It has RSI at 57, and on previous runs, it did run all the way up to 90. Look at this really big extended run. So this could be the start of the next push. We'll just have to see. If it pulls back below the 50-day simple moving average, and definitely if it closes below the middle Bollinger Band, it'll be a signal that it's not ready to go. It needs to stay above both levels now that they've been broken with the close above. Okay, look at HTGM, closed up nearly 11% today, and so this is one that's heating up. Keep an eye on it. They really drove it down. The middle Bollinger Band broke back here. The dotted purple line, that's also the 20-day simple moving average. It broke below the green line, the 50-day simple moving average. It came down, and it's been finding support at the 100 and 300-day simple moving average support zones, the blue and gold line. And then today, the bullish development was a close above the EMAs 4 and 8. There hadn't been a close above the lime line since way back here, and then it also closed above EMA 13. So it's been since this March high, this March level back here up near 540 was the last time that it closed above EMAs 4, 8, and 13. And so now with this day today being the first day since back here before the big drop, this is signaling the possible start of a reversal. Now it's going to be best if it can stay above the EMA 13 at 362. If it drops below that level, that would be a red flag. It needs to stay above, and then the next target's going to be the middle Bollinger Band at 388. If it can turn that level into support, that would signal the possible start of a new uptrend, and that would put the 50-day simple moving average at 431 on deck. So keep an eye on it. It's heating up. It's also in this sideways channel. Okay, so it always helps to put the trend lines in, and as you can see, it's hitting the high close horizontal resistance level right here in this white candle, and it closed right at that level, and so it has to break above to head higher. Fail to break this 365 level, that would be a red flag. It could keep going sideways. It has to bust through to get up to that middle Bollinger Band. So keep an eye on it. Take a look at AMPE. This is another one that closed above resistance. Only closed up 6%, but I thought that it was interesting. It came down and held the middle Bollinger Band. It looks like a bullish Haramee cross type reversal pattern, possibly confirmation today if I got that pattern correct. The bullish development was the close above the EMA 4. That had been resistant since it closed below back here when the drop started, and so now that it closed above, it could heat up. I mean, it had a really good run back here in March when it got above the EMA 4. It just kept cruising, and so maybe that could happen again. It's going to be all about getting above the middle Bollinger Band at 317. So if you see AMP close tomorrow or later this week above the middle Bollinger Band at 317, that could be the signal that it's getting ready to go again. I mean, this performs well when it gets above the middle Bollinger Band. Look back here, it got above. It bounced here and it failed to stay above and it pulled back. But there's been 3 out of the last 4 times it got above that middle Bollinger Band. It had an extended run. So keep an eye on it. You'd be looking for a run back up here to that 380, 390 level. If you look here at the 15-minute chart for AMP, it does look like it's heating up here. It was working on that 50 simple moving average yesterday, and that's the green line, and then today it got above on the first candle, and then it got above the gold line, the 100 simple moving average, and so now it's trading above both of them. Notice how the green line is getting ready to cross the gold line. That's a signal the chart's heating up. As long as it holds that middle Bollinger Band at $3 there, that signals this uptrend's intact, and then you're looking for a break above 310 and then a break above that 200 simple moving average at 315. If that happens, then the 300 simple moving average at 332 will be on deck. Okay, let's take a look at GTHX. Okay, this is one that I hadn't really heard of before today. I noticed it was on the top gainer list. I mean, it's trading at nearly $41 a share. Only 172,000 shares traded today, but when you check out the chart, you'll see this is kind of interesting. Notice that RSI is at 65, and previously it ran well into the 80s on RSI. You have Fasto now just back above 80. Notice how when it's been cruising in the past, it's been able to stay above 80. Notice the bullish crossover just started today on ADX, with plus DI crossing ADX to the upside. Notice the last time that happened was down here. All right, and that signaled the start of a run, right? Notice that the last time it was trading below 80 and then it got above was right here on this part, okay? And then check out how when it was up here and hitting this current level at 60, when it was up here hitting 60, that's lined up with this as well. So this was all the start of this run. Is it getting ready to break out and head to that next level? Well, this could go on to blue sky breakout mode. All right. So this is I don't know. I was unaware of this stock, but maybe other people have heard of it. It had this big volume back here in March, and so what's happening is it's hitting back to the top here. This is the all-time high close for the stock. It's never closed higher than this close here in March, and so this has potential for a blue sky breakout. So if you see this close GTHX close above 42 and then it breaks above 43, this is the all-time highest level of the history of the stock, then it could break out higher with no overhead resistance. It would be trading above all the moving averages. I mean, look over here. The 300-day moving average is even undefined. That's how short this period of time that the stock has been traded. Now the flip side of that is if it hits 42 and it fails to break, this would be a temporary top. It hit that level 5 times here, failed to break and pulled back, and so now if you come back and you hit it multiple times, that could be that double top or definitely temporary top. If it fails to break, it needs to stay above the middle Bollinger Band at 338 to keep it going. Notice you've got MACD crossing over in the 813 and 5, and that's hooking up on the 1226 and 9. And you also had the PSAR bull flip today, the green dots flip below the candle. SAR stands for stop and reverse, so it signals that downtrend is possibly stopping and a new uptrend is beginning. Now look, this is the weekly chart for GTHX. It started trading back here in May of 2017, and it has this pattern where it goes up, hits the top of the channel, down, hits the top of the channel, it's come back down, and then now it's hitting, it's hitting the top of this channel when I drew another trend line across this high close here, but the other trend line goes all the way up here, so that would push, that would put the top of this channel actually much higher. It would be up here, would be actual, if it continued with this trend line, you'd be looking at, this zone over here, hitting, and so it could break out higher and push higher. Now you can see here there is a declining volume pattern, and so that is, I think that is a red flag. You want to see, there's likely to be a volume spike coming, and so is it going to be a green volume spike or is it going to be a red volume spike? Now if it hits 42, 43 and it fails to break, you could see a red volume spike on a sell-off and it pull back, failing to break resistance. But what you want to see here if you're a bull is you want to see it close above this high close in March, above this closing price here. It's above that level right now. If it closes above that for the week, this candle sets on Friday, that would be very bullish. And then you want to see that break above 42. So yeah, keep an eye on it. Now, a couple of blockchain, Bitcoin-related type stocks, INPX and DPW to finish up. Keep an eye on INPX. Okay, so the chart is not pretty, but with all these other Bitcoin, blockchain-related stocks have been running lately, this might be next. You never know. It has volume spikes at the bottom. So that's, you want to see that. You want to see people trying to load off the bottom, and then you want to see them loading off the bottom, and at the same time you want to see support holding. And so you can see it's been channeling out for the whole month of April here, and it's all about, once again, that dotted purple line. I know I'm a broken record, but the patterns never change, right? The only thing that changes is the ticker symbols, and so we try to find the same type of chart setups that could deliver percentage gains. And so if you look here, the middle Bollinger Band at 102 is the key level to break. It broke above that level intraday. So if you see INPX trading above 102 tomorrow, that would be bullish, and then it has to close above. If it closes above that level, that's going to be your clue. Okay, yeah, this is it. This is a possible new uptrend starting. I mean, look how tight this is here. I mean, look at these candles. I mean, this is super tight. I mean, this is wound so freaking tight. Now, the downside is if it fails to break 102 and 90 support breaks, you could see it drop back down to test that lower Bollinger Band at 74 down here, and so that's the downside risk. But the upside potential is if it breaks above 102, you have the upper Bollinger Band at 129, and then you have the top of this other channel up here at the 160 level, and then you would be looking for a run up to that 50-day simple moving average at 177. So it has some nice potential, percentage gains to the upside if it gets moving. Notice that it hasn't closed above that middle Bollinger Band since way back here in January. All right, so this would be the first close once it happens, when it happens above that middle Bollinger Band since support broke in the start of the downtrend. So we're always trying to catch it when at that point in time where the trend is changing either to the upside or the downside, and that's usually where you make the most money. You get the best entry points is when you can nail that day. The day, if you can get in the day before it happens, that's the best. But then you have to be on it, or you nail it like right when it's happening. And so that's why we try to use the daily chart along with the intraday charts to try to time those entry points. And so if you look here, and exit points, and so if you look here at DPW, okay, so this has been one that's been, a lot of people are trading right now. It closed up nearly 8%. Okay, so it had that black candle, and it was, I still think it was the right thing to exit on this black candle, because look, it pulled back. If you were up here and the black candle is forming, and then what you wanted to do is it had to stay above that 135, and if you're able to exit, somewhere between 130 and 150, then you could have reloaded. If you like this stock and you're in love with it and you think it's awesome, you could have reloaded down here at 107, 110, and then you could have got a better entry point. The key is to reload off of EMA4, the pink line there, if it holds. And also this was lined up to reload off of that 300 simple moving average. I'm pretty sure I did put alerts out on that in the chat that was going to be the reload level. The downside risk is if this 250-day simple moving average failed to break, the gold and red lines, and then it dropped below that 300, there is an unfilled gap down here. So that is the downside risk, is it could eventually drop all the way down to 85 and fill that gap. Now what everybody's looking for, if you're a bull, and most people are bulls, or maybe not, a lot of people, at least in our chat, are bullish on this. If it can get above 135 there, a close above that 200-day simple moving average, that's going to be your clear signal. Okay, it's ready to go. Notice how they're not even letting it get above 128, the 50-day simple moving average. A close above both those levels should be that signal that it wants to head higher. And then what you do is you use those levels as your stop loss level. As long as it stays above, you can keep riding. If it drops below, that's your signal to exit. Notice how the 200-day simple moving average was support back here in February. It was support again in March, and now it turned into resistance. What was support turns into resistance. It makes it tough to break. Once it breaks, then you could see that run back up to $2 and possibly up to that 200 or 100-day simple moving average. Notice how it's lined up here with the previous high close from February. Okay, yeah, thanks for viewing the video. Please come check out our chat. I'll post the link below the video. Check out the premium chat, please. Come check it out. Thank you.